Your entire reality is an illusion built on trust. The digital numbers on your banking app, the plastic cards in your wallet, they are not wealth, they are a collective hallucination. Money works simply because everyone agrees to pretend. But the moment that agreement cracks, civilization gets very, very expensive. We are told the modern economy is an indestructible fortress. It isn't. It is a highly leveraged house of cards, resting on a single fragile foundation: foreign confidence. When a reserve currency dies, it does not explode, it evaporates. Cities do not eat money, they eat logistics. When trust dies, those logistics freeze instantly. We are always one catastrophe away from extinction. Here is the exact anatomy of a fiat collapse. And what happens to you the morning the banks finally freeze? The collapse begins quietly. It begins with a failed auction. Welcome to day one. The United States operates on a massive financial deficit. We consume far more than we produce. This creates an annual trade deficit of roughly $1 trillion. To survive, the Treasury must borrow the difference. They issue sovereign bonds. They ask foreign nations to buy our debt. For decades, global markets always showed up to buy. But what happens the morning they stop? Imagine a routine Tuesday at the Treasury. They open an auction to sell billions in new bonds. But foreign central banks simply refuse to bid. The demand vanishes completely. This triggers the sovereign debt doom loop. Without foreign capital, the government faces immediate default. They cannot pay the military. They cannot fund federal programs. The entire state apparatus threatens to freeze. So they activate the only remaining failsafe. The Federal Reserve steps in as the buyer of last resort. They purchase the unwanted bonds themselves. How do they afford this massive purchase? They create new digital currency out of thin air. This mechanical process is called debt monetization. It is a death sentence for fiat currency. By printing trillions to cover the missing capital, they dilute the existing money supply. Every single dollar in your bank account instantly loses purchasing power. Foreign markets watch this manipulation happen in real time. They realize the currency is being intentionally debased. A silent global alarm goes off. The American dollar is no longer a safe haven. It is a toxic liability. Capital flight begins immediately, but the true panic does not start with the government. It starts in the hidden plumbing of the banking system. The global financial system relies on overnight lending. This is called the repurchase agreement, or repo market. Banks lend each other billions every single night to stay solvent. They use US treasuries as collateral for these massive loans. Treasuries are supposed to be the ultimate risk-free asset, but after the failed auction, they are highly volatile. Suddenly, banks refuse to accept treasuries as collateral. They do not trust the government debt backing the loan. The overnight lending market instantly freezes. Without this hidden liquidity, major financial institutions become insolvent in hours. The credit system suffers massive cardiac arrest. By day 3, the contagion reaches the consumer level. The government panics and implements strict capital controls. They freeze international wire transfers. They limit daily ATM withdrawals to virtually nothing. Citizens wake up and try to move their cash. They scramble to buy gold, foreign currency, or physical commodities. But the banking apps crash under the sheer volume of transfers. The servers are intentionally throttled. You stare at the digital numbers on your screen. The terrifying realization finally sets in. That digital deposit is not actually your money. It is an unsecured loan you gave to a failing bank, and they are never giving it back. You might assume the worst is over once your account is frozen, but the mathematical reality of panic is just getting started. Once the banks freeze, a psychological switch flips. Money transforms from a store of value to a hot potato. This triggers the brutal math of hyperinflation. It is dictated by the velocity of money. Inflation is not just about how many dollars exist, it is about exactly how fast they move. When public trust dies, that velocity spikes violently. People spend cash the exact second it touches their hands. They buy anything physical they can find. Canned goods, fuel, tools. They desperately try to dump the dying currency. Even if the Federal Reserve stops printing new money entirely, the sheer panic of rapid transactions guarantees a price explosion. History proves this ruthless math over and over. During the Weimar Republic in 1923, the currency collapsed completely. It became cheaper to burn cash for warmth than buy firewood. German workers were paid twice a day. They took mid-shift breaks just to run to the market, because grocery prices would literally double by the afternoon. In 2008, Zimbabwe printed a $100 trillion note. It was barely enough to purchase a loaf of bread. The same exact mechanisms apply to the dollar today. The numbers on price tags will quickly lose all meaning. But the true catastrophe isn't what you can no longer afford. It is what simply ceases to exist. By day 14, the digital crisis bleeds into the physical world. The modern supply chain operates on zero slack. It is a highly optimized, just-in-time network. We are led to believe a collapse means running out of goods. That is a Hollywood myth. The system does not break because warehouses are empty. It breaks from a total lack of transaction trust. Grocery store shelves will be stripped bare in hours, but they will never be restocked, because distribution trucks will remain parked in their lots. A driver will refuse to trade physical labor for dying paper. They will not burn valuable diesel for a depreciating digital asset. The logistics of survival completely freeze. The damage scales globally in a matter of days. Foreign exporters immediately refuse letters of credit denominated in dollars. The cargo ships simply stop coming to the ports. This halts the import of critical necessities instantly. Foreign antibiotics, insulin, and raw chemical precursors disappear overnight. The illusion of abundance shatters against a wall of pure logistics. Yet amidst the starvation and the empty shelves, something completely bizarre will happen to the American economy, something that will make you feel richer than ever. During a currency collapse, you will likely become a millionaire, perhaps even a nominal billionaire, because the stock market will hit record highs every single day. This is the dark, counterintuitive paradox of hyperinflation. As the dollar dies, investors desperately flee cash. They pour capital into equities at any price. They just want to own a fraction of a physical company. The stock market indices will skyrocket into the millions. Your portfolio balance will look astronomically high, but those billions will not buy a single tank of gas. The numerical value is huge. The actual purchasing power is zero. There is exactly one group who wins this mathematical nightmare: anyone holding massive amounts of fixed-rate debt. Economists call this a debtor's jubilee. Imagine holding a standard $500,000 mortgage. When hyperinflation destroys the currency, wages eventually adjust to the dying math. You might receive a weekly paycheck for $1 million. You can pay off a 30-year mortgage with half a week of labor. The banks are legally forced to accept the worthless paper. The physical house is entirely yours. But being debt-free hardly matters. Not when the civilization outside your window is collapsing into the dark ages. By day 30, the panic burns itself out. What replaces it is an eerie, permanent stillness. This is the new baseline of reality. The social contract relies entirely on the state paying its enforcers, but local municipalities can no longer fund their own existence. Police officers and firefighters will not work for worthless digital credits. They simply stop showing up. A massive law enforcement vacuum opens up instantly. Survival becomes a localized, physical problem. Neighborhoods are forced to build crude barter networks. The new mediums of exchange are heavy and brutal. Ammunition, silver, medical supplies, and diesel fuel. Meanwhile, the geopolitical map is entirely redrawn. Currently, nearly 57% of all global foreign reserves are held in US dollars. When that capital is finally dumped, it desperately needs a new home. Rival infrastructures like China's cross-border interbank payment system absorb the panic. The financial gravity of the planet shifts eastward in a matter of days. Global hegemony does not end with a military invasion. It ends with the collapse of society. We treat modern civilization as a permanent fixture, but it is just a fragile consensus, held together by a shared hallucination. The moment everyone stops believing in the math of money, the lights simply go out.